Here's a jaw-dropping financial update that's turning heads on Wall Street. Morgan Stanley just crushed its third quarter earnings expectations by the widest margin in nearly 5 years. But here's where it gets controversial. While some celebrate this as a sign of economic strength, others are questioning whether this boom is sustainable in an increasingly volatile market. Let's dive into the details and decide for ourselves. On Wednesday, Morgan Stanley unveiled its third quarter results, and the numbers were nothing short of impressive. The financial giant reported earnings per share of $2.80, far surpassing the $2.10 predicted by analysts at LSEG. Revenue also soared to $18.22 billion, outpacing the expected $16.7 billion. To put it in perspective, the bank's profit surged 45% year-over-year to $4.61 billion, while revenue climbed 18% to a record high. This performance sent Morgan Stanley shares up nearly 5% in pre-market trading, capping off a year-to-date gain of roughly 24%. So what's driving this financial powerhouse? 3 key areas stand out: booming equities trading, a resurgence in investment banking, and robust wealth management. Equities trading revenue jumped 35% to $4.12 billion, beating analyst estimates by $720 million. The bank credited this to increased activity across regions and a record-breaking performance in its. Meanwhile, wealth management revenue climbed 13% to $8.23 billion, $500 million above forecasts, fueled by rising asset levels and transaction fees. And this is the part most people miss. Morgan Stanley isn't alone in its success. Wall Street-centric banks like Goldman Sachs are thriving in this environment, thanks to high trading volumes and a resurgence in deal-making. On Tuesday, J.P. Morgan Chase, Goldman Sachs, Citigroup, and Wells Fargo also reported earnings that topped expectations, painting a broader picture of strength in the financial sector. But here's the thought-provoking question. Is this boom a sign of a healthy economy, or are we witnessing a bubble in the making? With stocks near record highs and deal activity surging, some argue that the market may be overheating. What do you think? Is Morgan Stanley's success a harbinger of sustained growth or a warning sign of potential instability? Let us know in the comments below. This story is still unfolding, so stay tuned for updates as we continue to analyze the implications of these remarkable results.